It's July 24th, 2022. This is John from Options Trading Pilot, where we discuss and market conditions, looking at the future of the market, generally for the next week, little market outlook. Come to our website, Options Trading Pilot. You can see a little bit more about what we do. We're transparent. We're pretty mechanical on our trades. You can see our returns and how we post out. We post out daily ideas to Discord. So these are our trades that we do every day, and we post those out. And then we also do training videos out on YouTube. So you'll hear from me, and then a little bit later you'll hear from Guillermo, and he'll go into more of the directional things that he sees for this market. So real big week coming up. We have a lot of earnings. So we have NXP Semiconductors and Whirlpool on Monday. I will probably trade Whirlpool. Let's take a look. That's WHR. We'll have to see how things go tomorrow at the open. But this is definitely one. Don't look at the volume because it's the middle of the night, but this is definitely going to have some juice in here to play both sides. So we'll look at that one tomorrow. The ones I'm more interested in, we have General Motors, General Electric, Microsoft coming on Tuesday. I believe that's going to be Tuesday morning. Around the close. If we look at the weeklies, I like to go out. This has an 12-point expected move. If I was going to do naked options, I'm probably going to go out 25 points or so. So that puts us down into this 10 delta range. Probably going to be looking, and this is just as of right now, looking at, say, a 25-point move, and then backing off that a little bit. So around that point, and 25 on the upside would be 285. I'll probably go up to about there. So that's not bad for the week. 89% POP, probability of profit. And we're looking at $1.59 collected for the week on Microsoft, and that puts us at 10 delta on both sides, which is about 2 times the expected move. So I'm looking at that one. Other ones that we will probably trade, Coca-Cola also comes out on Tuesday. It's always a little tougher to trade. The expected move is only 5 points, and that doesn't really give you much. If you go out 5 points, you're in down here, and it just doesn't pay much. If you go out 2 times the expected move. McDonald's is coming up. That has historically been a decent trade. We'll have to look at it in light of where we are. It actually has moved quite a bit. So we'll analyze that this week, and we'll push that out to our clients. UPS, very similar. A lot of movement, has really moved up a bunch lately. That might have exhausted itself. Unilever is coming as well. We don't usually play this. The expected move is fairly small. And if you get outside that range, it doesn't pay anything to take any risk, as you can see here. So what else? We got Texas Instruments, CMG. Now on Wednesday, you start getting into a little bit more VA, Meta, which is basically Facebook, QCOM, BMY, Shopify, Ford, Qualcomm, and then Kraft. So KHC is that symbol. We don't do much in that either. You can see the expected move is fairly small, and you don't get paid for it. Even at like a 20 delta, you're only getting 50 cents. And that's probably about, oh yeah, I see even on the top side, you don't get very much. But things like Shopify, which we trade all the time, that has, let's just look at the weekly option. Now, this is weekly as of today. When earnings come out on Wednesday, it'll be a few less days, but the expected move is 5. So we're looking at about, if you go out at 20 delta, if you go out something like this, 20, let's just say 20 delta on both sides, you can see there's a little bit of put skew on this, but not bad. 80% pop, paying $1.45 right now. This will dramatically, well, you won't get paid this much if you don't put this trade on Monday. If you wait till Wednesday, if you did this exact trade and the market didn't move, it would be less than 145, probably about 90 cents or so. Thursday, we have VLO, Valero, Pfizer, Budweiser, MasterCard, Southwest Airlines, which is LUV, Pfizer, Merck, Intel, MO, which I like to trade. I don't know, I just enjoy it. Has a nice IV rank. And that have bumped up quite a bit, but you know, it's probably one I'll be playing. Apple, Amazon is also that day. And then we wind out Friday with ExxonMobil. So we'll see how that unfolds this week. 5-point expected move, which is not very much. The stock will move quite a bit. I don't think that's going to be paying very much. Something like Amazon, big stock, 10-point expected move off of 122, puts you at about the 20 delta on both sides. Let's say there's a little bit of skew in this one as well. So that's a big trade right there. And that would take $1,400 in buying power. But if you did an Amazon at the expected move, which I'm not going to do, I'll be further out, but that pays quite a bit. That pays $3 or $300 per contract spread for $1,400 in buying power. So max profit 300. Ratio of the business buying power is not too bad. So Amazon is in play, but I'm going to be looking at something a lot more conservative in Amazon. So that's what we're looking at this week. There's an awful lot going on right now. Not too much going on in the markets. As of tonight, here's the E-minis are pretty flat, only up 2 points. NASDAQ futures on a $12,000 product are up 2 to 3. So really not too much going on there. I am looking a little bit more at the bonds and notes, TLT especially. It's I believe TLT is probably about 112. Oh, it's 118. Wow. So okay, so it bumped up a little bit over on Friday. Oh yeah, here we go, right here. So looking at that, I think there's some strength in TLT, but we'll have to wait to see how some of the week unfolds. And the US dollar has been very strong. I might go back in and look at the yen again this coming week. And I think that's about it for right now. That's what I'm looking at. I might look at the Canadian US dollar pair here, but we'll see. We'll see as the week goes on, see how things go. Anyway, that's it for me. Lots of earnings this week. Looking forward to trading a bunch. Very active week for news and for earnings. Thanks for tuning in. Now over to Guillermo.
Okay, welcome to Options Trading Pilot. I'm going to do a brief review on the markets and see where we're going from there. I think it's important that that you know that this week is really tough to trade. There's a lot of earnings. And so let's talk about 30,000 foot view. 30,000 foot view. I know John went over a few things as well. But I just want to go over my side of it, which is 30,000 foot view is that the market right now is in a downtrend. Number two is guidance will seriously affect what happens on the earnings as far as what they do. But there's a significant event that's happening. I think that's Wednesday. The Fed is speaking, and they'll probably most likely do that 75 beep rate hike. And so if the market deems it that that's probably the last one, or at least the last significant rate hike that there is, then we are likely to see a nice bump up in the market. So let's start with QQQ. You're looking at my simulated trading account. I've been practicing a few things. I have a new algo that I'm trying out. I want to see if that works for my day trading. But look, the downtrend is clear, right? There's nothing to hide about this downtrend. We know it's coming down. We have not had the opportunity to really find a trend. As you can see, it's up, down, very short-lived, up, down, and we're right below this fib line. So as you can see here, this fib line is above this peak, and there's really no big peak resistance all the way onto here. And you can see the accumulation that happens right around, it starts at like 338 and it goes to about 345. It'd be nice to meet there because that shows us like a 15% return. There's another small resistance that's occurring here as far as like a zone, a resistance zone, but you can see that the volume profile is telling us that it won't be as much resistance as it'll be up here. The other part is that we're seeing this corridor coming down, and so every time we've gone above it, we do experience a little bit of a stall and a drop down. So having said all that, I want you to remain very focused that the news on Wednesday could have a significant effect as to what we're going to see potential upside despite negative guidance. Again, 30,000 foot view. Nothing has really changed. We are likely to see a recession coming. The market is an auction market that works with new money coming in. If new money is not coming in, then it's really hard to drive the prices up. And if there's a recession, that generally means that people are not having the amount of money that they used to have. Again, yeah, that should bring inflation down, which is good news, which is the main thing that we've been fighting these past few months, pretty much all this year. All the money printing that the Fed did about 2 years ago is having a serious effect for us. And then the infrastructure bill is still contributing to that. People keep forgetting about that. That's an ongoing thing. There's a lot of programs in there that help certain industries. So if you're not part of those industries, you're kind of in trouble, right? So overall, I want you to see this for what it is. This formation should lead to further downturn, but nonetheless, I would say the effectiveness of price action right now before before Wednesday or before the Fed speaks, then can be negated pretty strongly. So that being said, the foundational or the infrastructure that we have seen as far as price action movement, nothing has really changed. All we can say is that perhaps the future looking abilities of the markets are going to be right, and that this bear market will be, the recession will be shorter lived. So let's dig into the data here. So the immediate thing that comes to mind here is we're looking at the daily is that we overcame this down gap, right? And we're kind of at a place here that we've seen some resistance. You can see how many days we were stuck in 1, 2, 3, 4, 5, 6, 7, 8, 9 days we're stuck in the same place. And again, I already reviewed that while that was quite a long time, the volume profile doesn't show us to be as far as like a super resistance as we might see up here or even up here at 365. But boy, wouldn't we welcome getting up there anyway. This is the 918 crossover. I just use it as kind of a guide of how much risk we want to take. Notice that we are in a bullish stance. And so if you're trading, you generally want to be a little bullish when we're seeing this. The formation is telling us otherwise. And the MACD is looking overbought a little too much. So again, tough to trade today. And what I would anticipate is this really like this check, maybe down day today and possibly going up. So yeah, I am leaning bullish despite all the evidence and all the negativity that I'm giving you. Let's take a look at the SPY. The SPY, as you can see, there's this down gap here, wasn't quite met. That's tough, right? Let me see, did I miss that on the QQQ? Oh my gosh. There we go. Did I miss that? No, I didn't miss that. We did overcome that. So we're good there. The SPY presents a less rosy picture because there was the attempt to drive up on this down gap, and that represents an opportunity for bears to really slam this thing back down. So let's look at the volume profile real quick. Yeah, not much going on here, right? So there is the potential once again to really fill that gap and really drive it hard. At least you can see some resistance here, but again, the volume profile is not giving us a lot. Maybe at the top at 415, 394.20, that's what, 5% or so? That's not bad. So the next one significant over here is 440s. Let's welcome that, right? Let's have it come. But again, very difficult to trade when things are looking like this, right? Not too much trending. You know, if you're not right away, you're wrong, and if you're wrong right away, you could be right. But gosh, it's tough. It's tough right now. This candle's tough. That candle's tough. That candle was tough, and not too many days in a row that we're seeing. So just you require a little more skill to trade. Lastly, let's look at the DIA. I think it looks exactly the same as the SPY. Yeah, didn't fill that down gap. That represents again an opportunity for bears to drive it down. We're in overbought territory, so it could come down. Nonetheless, all this remains somewhat irrelevant until the Fed speaks, and we'll see what happens after that. But I am going to remain bullish here. Practice account, so you know. I'm going to remain bullish here just because we have seen, let's see, where are we? This is a higher high. And so the question is, do we see a higher low and have it drive back up? This is the DIA, the SPY. Yeah, higher high. You can see right here, higher high. Do we get a higher low and have it drive up? Okay, guys, I hope that helps. I didn't go over a lot of the details for trades. John did that. Come visit us, Options Trading Pilot. We have trades that we give out, some education. We'd love to see you there.